Welcome Investorholics to another ETF Spotlight review. Today we'll be looking at PMGOLD, which is the direct investment in gold through Gold Corp or Perth Mint. Well, hello there Investorholics, this is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. So PMGOLD is a right to gold created by the Perth Mint, which gives investors the ability to purchase government-backed gold via the Australian Stock Exchange, the ASX. The price of PMGOLD is intended to track the international spot price of gold in Australian dollars. Why are we bothering with this one? Gold price has risen by an average of more than 8% per annum for the last 15 years. Gold has typically performed strongly when the markets have declined and has traditionally helped balance an investment portfolio. Gold is well recognized hedge against inflation, historically helping to protect investors' purchasing power over the medium to long term. Gold has typically performed strongly in periods of financial market stress, making it a simple and effective hedge against market, geopolitical, and event risk. So, close of trade, the price was $25.60. Largest gold ETF on the Australian market, $8.5 billion thereabouts. Management fee of 0.15%, not too bad. No distribution, obviously, so there's no dividend. So each PMGOLD unit represents ownership of 1/100th of a troy ounce of gold. PMGOLD is fully backed by physical gold bullion held by the Perth Mint, with metals stored on investors' behalf guaranteed by the Government of Western Australia. PMGOLD units can be redeemed for physical gold from the Perth Mint, which is nice. PMGOLD may suit investors who prefer to manage their gold investments within their stockbroking account, along with their other ASX listed equities and other holdings. Some experts suggest holding 1 to 5% of gold, and the main reason for that is gold is uncorrelated to most other assets, and that can help to hedge against risk for the rest of the portfolio, as we touched on before. Some other gold ETFs on the ASX to look at would be Gold, GOLD, or QAU. Okay, so let's look at the chart. We can see here on the left hand side she's had a pretty good run since inception at the start, or the midway through 2003. So we're sort of looking at, was it 9.77%, not too bad. 1 year gain's been pretty impressive, 43%. So if you've sort of been in the market for about a year, you'd be doing pretty well out of this one. So in uncertain times, many investors historically have turned to gold as a safe haven. If investors are pessimistic about equities, based on the expectations that slowing economies will have an impact on earnings, gold may well be a beneficiary. As a portfolio diversifier, gold has tended to provide negative correlation to other equity markets, as I kind of touched on a couple of times. So there's definitely differing opinions to gold, and you definitely want to actually have a look at the time frames over which you buy it to, so that obviously affects the performance. So a few key points for investors. One of the best investors in the world doesn't like gold. Good old Warren Buffett says it doesn't do anything but sit there and look at you. So it doesn't actually produce anything, just effectively it's another currency. So as with most investments, you want to be using creating a diversified portfolio. So gold's just one part of that diversified portfolio. When we're investing in gold, we also need to understand our time frames. So when we're investing over the short and long term, historically that's been a bit of a influence for sure. So the last 15 years you've had pretty good returns from gold because the cash rate's been pretty low. But if you look at a 30-year time period, gold hasn't performed as well. So you need to do a bit of study on the markets and understand or get a bit of an expectation of what you think or how you think it's going to perform in the future. So gold is not a foolproof investment. As with stocks and bonds, its price fluctuates depending on other factors in the global economy. So as we've kind of touched on before, you definitely want to use it as part of a diversified portfolio, which is quite important. So, you know, just acts as a counterbalance, typically in market declines. So when the rest of the market's going down, you should see some increases in the price of gold, in the price of your investment. So yeah, just a little bit of a hedge. So I thought it might be interesting to include a little bit of information about Gold Pass, which is the Perth Mint's gold trading app. So it's pretty new. It's been out for 12, 18 months or whatever. So you can securely buy and sell and transfer physical gold via certificates with Gold Pass. So it's kind of like cryptocurrency almost. Well, that's what they're trying to promote it as. So Gold Pass offers another dimension to the existing range of innovative investment and storage solutions offered by Perth Mint. So I've been playing around with this one, so I'll do a video on it and let you know if it's actually any good. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky in Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.